about 30 minutes ago, we found out the results of the big Treasury 10-year bond auction. Today, it is the first new issue of the benchmark Treasury bond this year. The question, with the ballooning deficit and high unemployment, does the world still perceive the U.S. government as a safe haven? Our own Matt Miller comes to us live from RBS in Stamford, Connecticut. That's one of 18 primary dealers that distributes U.S. Treasury bonds. He is on the RBS trading floor with RBS Treasury strategist Bill O'Donnell. Bill's the guy who analyzes the auction statistics, who can tell us what we learned from today's auction. Matt?
Thank you, Lori. You know what? Why don't I just kick off to Bill with that question? I mean, does the world still see the U.S. as a safe haven? I mean, can you tell from the auction if that's what went down here?
I think it's very hard to tell what went on in today's auction. All of the auction statistics were slightly below recent averages. We like to look at a 6-auction average to use that as a basis of comparison for all of the internal statistics, such as the bid-to-cover ratio, the total number of bids relative to the size of the offer, the amount of indirect bidder participation, the direct bidder participation, in other words, non-dealer awards. And all of those statistics were slightly below average. I view it as a success. And the reason being is the swirling uncertainty with the EU debt crisis or whatever's going on in Europe. You have holidays coming up in Japan and China. You have a massive snowstorm on the East Coast. A lot of people probably out. And I think the fact that they got this auction done, tidied up, move on to the 30-year tomorrow, I think that the Treasury has to be pleased.
It's clearly a rough day to do any kind of business in the tri-state area here because of the snowstorm they mentioned. But shouldn't the situation in Greece push more people into U.S. debt? I mean, isn't that one of the reasons that we see when we do see Treasuries rally, one of the reasons we see them rise?
Well, here's something else. The knee-jerk reaction in Europe to what's going on is the tendency to go into their riskless asset, which is the bond market. But if you look at the time series of the relationship, let's say in 10-year notes, Treasury 10-year notes versus Bund, 10-year bunds, Treasury 10-year notes do look cheap to bunds that are around a 43 basis point spread, with Treasuries almost a 0.5% over 10-year bunds. And as a result, when the money flows into bunds, global investors, what they'll do is sell their bunds into that upward push and swap back into U.S. Treasuries. So we've been following the bond market, which has improved on this flight to quality flow. And Treasuries have gone up as well.
And, I mean, we talk about the demand side here. There's a heck of a lot of supply. I was talking with Rich Volpe about it earlier. A lot of people are surprised at how well the auctions actually went last year and how well the auction went today because of all that supply. I mean, what's your take on the amazing amount of supply here?
Well, this is a very critical point, because I think what happens and what I'm about to discuss is going to determine the path of rates in the next 6 to 12 months. If you look at the amount of public debt issuance, that is Treasury supply, it's been growing massively. And so people look at these auction sizes going from 21 billion to 25 to 35 to 40 to 44 billion, like in 2-year notes. And they just say, oh my gosh, we're being overwhelmed by all this Treasury supply. Rates have to go up. But what people are missing is that private credit flows, as a subset of total domestic borrowing, have collapsed. Financial borrowing, household borrowing, business borrowing has collapsed. So what is effectively happening is that Treasury borrowing is just basically becoming a larger slice of a shrinking pie. And I think that's a very important point. And if private credit flows don't return, and Treasury supply seems to be plateauing here, and Treasury themselves said in the November refunding announcement they could start to cut coupon issuance by the end of the second quarter, maybe in the third quarter. There's no reason for supply to push rates up here.
Okay, and of course, when we are going to watch, obviously, to see if private credit issuance does return. Thanks to you so much for joining us. Bill O'Donnell, head of Treasury strategy. We're going